Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, Michael Romer is back with us, managing partner at Romer Debbas, a boutique real estate law firm in our hometown of New York City. It is great to have you back.
Jill.
It's been, since before COVID, we're back in studio together.
It's exciting to be back in the studio. It's much better than virtual, and I'm just happy to be here.
And it's great. And you know what? I love talking to you and Pierre because we talk about housing data and the market, and we want to specifically focus on entry-level buyers. For this particular segment, we saw the data that came out this morning, continuing to see declines in supply and what's available. It almost seems as if it's a classic case of supply and demand.
It is. We have a real problem in this country of housing shortage, actually an affordable housing shortage. Right. You know, the National Multifamily Council came out this morning and predicted that we need 4.3 million new units on the rental side over the next 20 years. And then nationally, for the single-family housing market, most experts say we're about 4 million short. That's a real problem. So when you have this type of supply and demand problem, the prices are going to remain high. It's really a difficult problem, and it makes it really difficult for individuals who are looking to buy, first-time homeowners, to actually purchase a piece of property. Another report that just came out was 80% of the metro areas in the U.S. have increased in prices roughly 14% year over year from today to last year. That's 80% of the metro areas. We're talking about a serious problem where it's very, very expensive.
Well, there's a couple things at play here. First of all, there's simply no incentive. If you're a homeowner that got in when rates were 2, 3, 4%, really what's your incentive to move if you don't have a life-changing event? So that's another thing. There's just no houses going on the market for that reason. And then also, what if you can't find a home? There's nothing available.
Well, the problem people have, especially people that have been living in a home for a while, if they sell, where are they going? And can they afford it?
Right.
And even if they want to go the rental route, rents have reached the point where they're so high, if somebody's looking to sell their home, maybe somebody who's an empty nester, it's too expensive. They really have nowhere to go. So ultimately they decide to stay because, again, they have no incentive to actually leave. Absent a lifestyle change or some type of life event, they really have no incentive to actually sell their home.
Right. Well, same thing too. Mortgage refis have to fall off a cliff.
You know, it's really sad these days what's happening in the mortgage market, because you look every day, you're seeing another bank make layoffs, especially in the refinance space, just because the drop. I mean, you're looking at refinances dropping somewhere in the area of 40 to 50%. However, the flip to that is the purchase market. All right, so I manage a law firm that represents both buyers and banks. Now we're becoming a firm in demand because we're actually representing the user, the end user who's actually purchasing an apartment. So we can make introductions to the banks because the banks are shifting their gears right now. The refinance business has dried up. They need to actually get to the buyers for the purchase mortgages. But in order to do that, they have to sadly streamline and reduce their ranks.
Right. Well, okay, but let's talk about affordable housing for a moment. There's more issues here. You always have NIMBY, not in my backyard. Nobody wants affordable housing in their backyard. They don't want affordable rentals. There is clearly, no supply out there. How do we get this back into balance?
Well, it's going to take government action, and the government has actually started by really taking money from Fannie and Freddie Mac in the multifamily space, and they've actually came out with their own edicts basically saying more than half of the money they're allocating needs to go to affordable housing, because that's the biggest need in this country right now. We need more affordable housing units, especially in the multifamily space, because there's just not enough housing. You know, that report that I read to you, that I read off a few minutes ago, you're looking at 4.3 million units that are needed, and those need to be affordable units. Those don't need to be market rate units, because that's really the biggest need in this country. At the point that we're at now, it's just too expensive, and people need, more than anything else, a place to live.
Right. Well, what about private equity buying up homes that are at the entry level, And I mean, is the government thinking about that at all?
It is, but the government's in a bind on that front.
Right.
So when you're looking at some of the largest investment funds purchasing up single-family homes throughout the country, that was unheard of years ago. Now, single-family rentals, that market is booming across the country because the funds, being wise, are looking at this saying, well, this is a good investment opportunity, because then it really looks at the rental market. If you're looking at record high rents, here in New York City, we're in excess of $5,000 a month. And across the country, obviously it varies market to market, but the smart investors, the funds, are looking at this and saying, we could make money off this. And sadly, that really impacts the market. It impacts pricing, because if you're competing against a hedge fund, the hedge fund's going to win.
You know, especially when they can come in with cash or finance it via debt. Let's talk about New York City for a moment here. We've for those of us that lived in New York City in our 20s and 30s, I mean, rent was always an issue. But I can't even imagine now 5,000 plus for what, a one bedroom, right?
Yeah.
What do you pack, 4 or 5 roommates in there? You're fresh out of college.
It's really a shame, but part of that has to be with the allure of New York City. This is the place that people want to be. I've been practicing here for 20 years. New York City has survived just about everything thrown its way, but there are times where the market just, due to the demand and the amount of people that want to be here, rent skyrockets. I mean, $5,000 a month is really high, but here's the other piece to the puzzle. In order to qualify for an apartment in New York, you need to make 40 times the amount of the rent. So that's a lot of money. We're talking about $200,000 a year to afford a $5,000 rental. Who could afford that?
Right. I mean, everyone's coming out of business school, working for Goldman Sachs, and making that kind of money. I just can't even imagine. So therefore, the 4 or 5 roommates. I was also reading that because so many incentives were offered during COVID to keep people in the city, rents are going up like 40, 50%. I mean, and then because that happened, you have to compete with everyone else in the outer boroughs to get other housing.
Yeah, there was a short window where there were a lot of incentives.
Right.
Look, we were here during COVID and landlords were struggling and they needed to come up with ways to get people to actually rent in the city. So they were giving out these incentives, developers were doing the same and still are, but on the rental side, due to the high demand, now they don't have to.
Right.
If they're getting renters to pay $5,000 a month, they don't have to give the same incentives as they were during COVID. So now you're seeing, again, people looking to other areas of the country as well, to try and find a lesser expensive place to live. Maybe it's a state like Florida. There are 3 of the top 5 metro areas in the country in terms of year-over-year price increase are in Florida.
Yeah.
Number 1, oddly enough, was Fayetteville, Arkansas. I don't know what's going on down there, but that jumped off the page for me.
I mean, if you can make New York money and live in a place, I mean, the cost of living here, everyone knows it's extreme. I had an interesting company on the show yesterday, Data Assembly, a data company, and they had pointed out in their grocery index that Des Moines and Tampa had the most inflation in grocery because there was so much demand and not enough inventory, and not even that, but public services and so forth. These cities become overwhelmed and the demand just skyrockets.
And a lot of this has to do with remote working too.
Right.
So if you have individuals that are making New York money, as we're calling it, and maybe living in Arkansas, well, eventually employers have to bring people back. I mean, New York City in particular needs the workforce back. Small businesses need the workforce back. The shoe shiners, the dry cleaners.
Right.
New York City really needs the large corporations and the small corporations to bring their workforce back and to really encourage them to come back.
And of course, there's nothing like being at the Marketside studio.
It's the best place to be in the world.
All right, Michael, great to see you. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.